What's interesting to me about ESG is, well, in theory, most people would subscribe to the idea behind it, and there is finally money that's definitely coming in. We saw these numbers that we just put up earlier. Yet we're seeing some pushback against this. The Labor Department, for example, just issued some commentary, essentially trying to remind fiduciaries that they should not be pushing what they call social agendas, that their job is to maximize profits for their investors. And including people who are voting as proxies on that. I know you pay attention to this, Eric. Do you view this as a sort of temporary pushback on certain parts of the of businesses like oil that are not necessarily being very well treated by ESG, and it's something to overcome, or do you think this is a serious objection that some people like the Department of Labor have had?
I mean, it's basically ridiculous. I mean, in the middle of a pandemic and all of the other crises that we're living through that have made it crystal clear that human capital investment is not a luxury but a necessity, the vulnerability of supply chains, the fragility of business models. Like, if there ever was a reminder that conditions change and that what is material for a company one day suddenly is not, or vice versa, we've really seen this in this crisis in particular, that companies that act to keep employees, suppliers, and workplaces safe, they are the ones who are performing in ways that those stakeholders are going to remember for years to come. So to say that that's a social agenda or that's not material to business performance, I mean, I don't know who said that, but that is pretty absurd.
And the employees want to stay at those companies. They don't want to leave, and that's what grows companies, is happy employees.
I have spent 10 years trying to reform companies in a variety of ways, through my work on the Lean Startup. And if you've never sat in an all-hands town hall meeting of a large company and watched the questions that employees ask to CEOs and seen that change even over the last 10 years, the pressure is not just from Wall Street anymore. Most companies that understand 21st century thinking, that are going through digital transformation, are in a war for talent. And the next generation of employees, let alone the next generation of investors, they're not going to tolerate this. So I think there might be some rearguard action, some pushback here and there, but this is a generational seismic change, and the next generation wants something different. And believe me, they are going to get it.
Yeah, I would agree. The trend is definitely in favor of ESG. How about the competition? So I'm trying to think about this. I'm the New York Stock Exchange, or I'm NASDAQ, for example. And I'm saying, okay, so there's this new exchange, a competitor, long-term stock exchange. What they want is sort of higher listing standards, more ESG focus. And I guess if I was the NYSE or NASDAQ, I would think, well, that's nice, but there's nothing in the listing requirements of the NASDAQ or the NYSE that would prevent any company from having higher listing standards. I think that maybe their attitude might be, well, okay, but they can do that here with the NYSE and NASDAQ. Why do you need a separate exchange with a completely different listing standards? We'd welcome higher standards if the companies want them.
Can you imagine if
Eric,
people said that
what do
kind
you
of
say to
thing?
that?
Yeah, we imagine people said that kind of thing about financial compliance. Like, we don't need standards and rules. So just, anyone can be compliant if they want to be. That should be good enough for the public. I mean, come on. When something's important, we standardize it, and we want to know that there's accountability to following those rules. So, beware companies bearing gifts. When you read an S1, when you read a prospectus, and companies are claiming to be a next generation company, believe in transparency and diversity and inclusion and equality, justice, fair, all these buzzwords are loaded up in these documents. I think the public needs to know who's for real and who's not. Now, to be clear, we don't view the legacy incumbents as competitors. And, old school, old fashioned companies need a place to list too. So Philip Morris got to be listed somewhere, I understand. That's not really for us. We encourage companies to dual list out of an abundance of caution, still access the liquidity of NYSE NASDAQ if they want to. We're happy to be the secondary exchange. We don't need that extra subsidy of running the open and close auction every day. We want to hold companies to a higher standard and help them develop a governance framework that actually will allow our civilization and our capitalist system to survive and thrive into the next century.
Okay,
well,
Tom.
Eric, this is Tom. Just in final points here. I mean, there couldn't be a better time to bring this forward. We talk about ESG regularly, Bob, and it's not a fad. It's not going away. We can just see by the numbers. And then really, Eric, what you bring out in today, what everybody's going through individually with working from home, in their environmental and physical resources, social issues that are going on, it's a great opportunity to bring it forward. So best of luck.
Oh, thank you for saying that.
And really timely with the Citigroup hire today as well. We're very pro gender equality at Wallach Beth. We were very pleased with that news out of Citigroup.
Seismic change. The tides are changing. I'm blanking on my metaphors here.
Well, Tom and Andrew, you summarized my feelings exactly, so no need to have me do it anymore. We're out of time, folks. Very interesting discussion. This is a good example. We've been covering ESG for a long time here at CNBC on ETF Edge, and now we have exchanges that are interested in this as an ideological concept, as an intellectual concept for the good of the country. It's a side that things really are changing. And Eric, stay in touch. Let us know how you're doing. Be happy to have you back in the future. Talk about this as well.